after falling 7% yesterday, it is now up 2% today. But guys, it's been a pretty lackluster 1 year. Down 8% for the year, up 8% year to date, down 7% in the last 6 months, up 10% in the last 3 months, up 14% in the last 1 month. So even with its big fall yesterday, it's still up 14% in the month. But you know what I'm going to tell you? It doesn't matter where the price goes. What matters is the business fundamentals. And can you, as an investor, emotionally manage it when the stock goes up and down so big and so scary? It is scary. This is 310. Big high for Alibaba. And it just went kaput. Why? China. China had a big issue. They have geopolitical risks. They have the shutdowns that were a lot longer than everybody else's. They're just coming out of those. Now, there's some population issues. But even with that, one thing I say about China is I think China is becoming economically more and more independent and wealthy as time goes on. That's very apparent in the way their economy has grown. This is China's GDP per capita growth since 1985. We're currently right here, about 12,500. Now, granted, straight up arrow, but remember, this is all the more likely because of how they shut down for so long and still saw some growth. Even growth during the COVID times. That's what growing economies do. Everybody in the US is so scared of China. Why? Guys, a stronger China, a more economically independent China, a wealthier China is better for the entire world. Every area of the world is going to get wealthier and wealthier. And guess what? We're already so wealthy, it's hard to grow. Guys, our GDP per capita is like $70,000 or $75,000 a year. They're at $12,500. They have a lot more growth potential than we do. More power to them. And the number of billionaires in China, absolutely, the number of millionaires, fastest growing middle class and millionaires in the world. That is awesome. Currently, 82% of people in China who have access to the internet are buying online. It's a big number. It's up from like 50% 10 or 15 years ago. Just shows how much China is advancing with technology and with the poorer people in the country. This is a great boost for not only China, the world, and Alibaba. Look at this growth, the number of e-commerce employees in China in the millions. 27, 32, 37, 42, 47, 51, 60, 67, and 70 million people in China work in e-commerce as of 2022. And it's going to grow from here. Alibaba has Alipay. Alibaba has a cloud business. Alibaba has several other businesses they own. And last year, they decided to split their company into 6 different divisions with 6 different CEOs to help run them independently. Revenue to show annual growth rate of 10% per year from 2024 to 2029 for online e-commerce market. In the e-commerce market, the number of users are expected to amount to 1.36 billion users by 2029, and user penetration will be 78.8%, expected to hit 97.4% by 2029. And the average revenue per user expected to get to $1,526 per user. Guys, and that's only going to grow as the country becomes wealthier and wealthier. Your tailwind is this economic growth and the number one company in China. Now, these are all great stories, but as Professor Aswath always says, a story without numbers is a fairy tale. Numbers without stories is an Excel sheet. The question is, can you detangle yourself from the emotion of the exciting growth of China and sit there and pay a reasonable price for Alibaba? In 20 or 30 years, do I think China will be a richer country? Do I think Alibaba will be around? I do. Do I think they'll make more revenue and profit than they do today? I do. So the third and most important question is, what's a reasonable price to pay? But with everything that's going on out there, invading Taiwan was an issue for a long time. Haven't heard much about that lately. ADR is the fact that you don't actually own shares of the business was a big issue. Don't hear anything about that much anymore today. All these things that you hear about then dissipate over time. There are still geopolitical risks. There's still a communist political party there. But I'll tell you something. I'll tell you a little secret, guys. Communists love money. Look at Bernie Sanders. That ass is worth $15 million. He drives around an Audi R8, and his wife runs a for-profit education school, even though he criticizes student loans. That's the great thing about politics. They're so hypocritical, especially on the extremes, both right and left. Even more hypocritical. The Communist Party in China wants money. They want to be wealthy. Trust me on this one. The people want more wealth. Once they get a taste of wealth, they want more of it. They want to be able to buy better things. They want to be able to provide better for their family. They want to be able to take trips, things like that. You look at Tesla investing in factories in China. You look at Disney investing in China. All these things happen. Why? There's a lot of wealth sitting there to be tapped. Now, are there a lot of real estate developers losing their asses right now? Yes, that is an issue. That has been an issue, and it'll likely be an issue for a while. But again, you have to sit there and ask yourself, is this sudden drop in price here that we see something to take a look at? Absolutely. Take a look at it. If you loved it at 320, how should you feel about it at 80? That's my question to you. This is a long-term play. It's not for the faint of heart. But remember, that's how you make a lot of money in investing. You have to go against the grain. So their market cap is 206 billion. Enterprise value is 215. That difference there is essentially their debt. And guess what, guys? They have over $20 billion in free cash flow against, what is that, $9 billion in debt, net debt. Guys, this is a company that has a great balance sheet. Look at their free cash flow. And since we don't updated numbers yet, because they haven't come out, 23 billion, 12 billion, 26, 18, 14, the last 5 years, an average of $19 billion a year. And they just announced a dividend. The first is a special dividend of 66 cents. It's being paid one time. The second one's $1 per year. That's $1.66 for this year on an $80 purchase price. Okay, it's 2%. Nothing to write home about, nothing to sniff at. Personally, I don't want the dividend. Buy back your shares, especially considering your current price of free cash flow is about 8 times free cash flow, maybe 9. Come on, what are we doing here? Buy back your shares, guys. This is a growing company still. Yes, its growth has slowed because they're just coming off the China slowdown, the lockdown, and that caused issues economically. But let me ask you a question. Do you think China is going to grow slower than the US over the next 20 years? Come on, give me a break. No way. I mean, is it possible? Of course it's possible. But this is a company who has so much labor to get out there in the markets at low values. It's going to drive up their revenue, drive up the per year income. It's going to happen. Now, the question is, can I stomach the massive fluctuations in the stock price? Well, I guess I have to. My thesis has not changed on Alibaba because all I hear is the noise of every 6 months, there's a new reason why you have to hate China and Alibaba. I'm fine with that. But remember that going forward. And remember, I'm not saying I'm right. What I'm saying is, if I had 30 bets like Alibaba, I would be the happiest guy in the world. Because probably 5 or 6 of them would go kaput and do terrible, but 20 of them would do about what I expect, and 5 of them would probably do even better than I expect. That's called playing the odds. Just like if you were given every single time you flipped a quarter, heads you got $1, tails you got 50, you lose 50 cents. You would flip that thing as many times as you could. There'll be times when you hit tails and have to pay 5 times in a row out, but there would also be times when you get account for that, more than account for that. That's the point of investing, is making your bets when the reward is in your favor. And the emotional side is difficult. You have to sit there and see the stock fall. You have to sit there and see the news and China sucks and all this stuff. People hate China and all these people in the US saying, stop taking our jobs and all this stuff. And it's like, okay, I get that. It sucks. I get affected by the news at times. But for me, I'm able to now take a step back saying, okay, what if this is just people complaining about something? Because the ADR thing was really where I got hold of this. I said, wait a second, this ADR has been going on for a long time. The ADR was an issue when the stock was here, but nobody seemed to care. Why? Because the stock was going up. Now all of a sudden it's an issue because the stock is going down. That makes no sense to me. That's why I want you to understand. When you're at home all alone, sitting there, seeing a stock go down, how do you feel? I know I don't feel good, but I'm able to sit there and look at the fundamentals and remember that why I bought and see if that thesis is still in place. But more importantly, I've got my thousands of like-minded investors I can go to and talk to and see what they're saying about these things. And some of them disagree with me. Some of them agree with me or have different viewpoints. The point is, it's people to talk to so you're not on that lonely road, stuck in your house all by yourself. So if you want to make less emotional decisions, which will probably lead to more profit, click the link below, sign up, $7 for 7 days. Remember, we have limited spaces every day, so make sure you sign up before we run out of our spaces. We want high quality people, and that's why we limit our spaces. So if you get in the wait list, watch for the email coming out right after to allow you to fast track yourself a little bit quicker if you're serious. So I look at the analyst estimates. So Alibaba, not very good for analyst estimates. $9 per share this year, going to $10.67 in the next 4 or 5 years. That's barely any growth, right? 5, 6, 7% a year, if that. Revenue, 7 or 8%. Not much. I have a hard time believing it's only going to be 7 or 8% because China's GDP is going to grow. Their per capita GDP will probably go faster as their population declines. I look at this going, maybe the analysts are what I always say. Maybe they're just biased by what they see out there. I don't know. All I know is I sit there and say, what is a lopsided bet here? Is it possible? So that's where I go to the stock analyzer tool. And I'm going to pull up Alibaba in the last time I did it. April 23rd. Here are my assumptions for the next 10 years. 3, 6, and 9%. Guys, to me, this is so absolutely low. But I'm going to keep it at 6%. Profit margin, I did 15, 19, and 23. And their free cash flow, as you can see, tends to be higher than their profit margin. So I'm going 17, 22, and 27. And for their PE and price of free cash flow, I put 16, 18, and 20. Now, the last line, desired return, I put in 9%. I want to be around 9 or 10%. Why? That's the market return over long periods of time, 9 to 10%. So this has no margin of safety in here. If I really want the market return, I just go buy an ETF. So if you really want to buy an individual company, my recommendation is have a higher desired return for margin of safety. But I'm just putting this in here to say, what's it worth today? Hit the analyze button. Guys, I have 120 to 137 on the low side, 340 to 400, 200 to 240 in the middle. Guys, I wish I had 30 of these to buy because I'd buy all of them. But again, don't buy just because I'm doing it. Make sure you feel comfortable because you don't feel comfortable, you're not going to make the right decision. Thank you for your time.